Paysafe dropped 40% in one day last week. What happened exactly? What are analysts thinking at this very moment? And what did I do with this move? My name is Wiebe from Nesami, and it is my mission to provide everyone with a financially healthy life. And first of all, we're going to talk about the bad news for Paysafe at this very moment. We're going to take a look at the Q3 results for Paysafe, as we can see in this investor presentation of Paysafe. First of all, we can see that the performance is way worse than expected. We can see that, well, right over here, this light blue line indicates the prior expectations for Q3 and Q4 of this year, 2021. So we did see that according to this investor presentation, in Q3 there was already a lower expectation compared to Q2 and Q1 of this year. So we can see this light blue dotted line basically going down in Q3 and going back up in Q4. But now we can see that the current expectations, or well, let's first start with the Q3 results. These are way lower than the prior expectations actually were. And we can also see that the Q4 current expectations are even lower than the Q3 current results, of course, which is a very big difference between the prior expectations. So this is one of the main drivers for this massive drop of 40% last week. If we then go to a different page of this investor presentation, we can check out the guidance of Q3 2021, so the past quarter, and look at the actual numbers. We can see that there are big discrepancies between these guidance numbers. So they expected to have between $360 and $375 million in revenue, but only got $354 million in revenue. So that is, of course, a big decrease, and we can see that the gross profit is also slightly lower than the guidance had indicated for Q3 of this year. They have also been revising the 2021 guidance for this year, of course. The growth is way lower than they actually anticipated beforehand. We can see that the prior expectations for the entire year, for the full year of 2021, were about $1.54 billion for the entire year. Now we can see that the updated guidance is around $1.475 billion. So they expected a growth of about 10% year over year. So 2021 compared to 2020, a growth of 10% was expected, but now they are going to experience a growth of only 5%. So the growth is about half of their expectations, their prior expectations. We can also see that the preliminary expectations for 2022 have also been updated. We can see that the revenue guidelines for 2022 are around between 1.53 billion and 1.58 billion. And if you look at the current expectations for this year, that means that next year we're also going to have a growth of more or less 5% in 2022 based on the comparison of 2022 versus 2021. And again, if you look at these numbers, now keep in mind this is a current expectation of about $1.475 billion for the entire year. This is the expectation for 2022, around $1.55 billion for 2022. Now, if we look at this one over here, we can see that the analysts were actually expecting a way higher revenue for 2022. They were projecting $1.75 billion. So that's a difference of $200 million. That is quite a big jump, of course. This is not the only bad thing right now happening to Paysafe. Paysafe already has quite a lot of debt as well. We can see that they currently have about $262 million in cash and cash equivalents, but they have a massive debt of about $2.2 billion. So the net debt, if you take the total debt minus the cash and cash equivalents, the total or net debt is about $1.9 billion in net debt. That is, of course, not too great at all. We can also see that there are some other massive important news for Paysafe. We can see that the revenue was mainly impacted by the exit of certain clients in the direct marketing vertical within the integrated processing segment. So that is, of course, always bad news if some of your clients are exiting the business that you are in. And we can also see that according to this investor presentation, or according to this piece of news, the gambling regulations and softness in key European markets have been quite challenging for Paysafe. I, for example, live in the Netherlands, and I know that in Germany we also have more and more regulations with regards to gambling, with regards to, for example, poker. And yeah, for Paysafe, it is more and more difficult to be operating in those regions within the Netherlands, within Germany, and these are definitely key European markets. So can we also mention some positive news about Paysafe? Well, yes, a little bit for sure. We can see that they had a nice revenue growth of 50% year to date in the iGaming space, especially in North America. So that is definitely a good sign, but keep in mind that the revenue from iGaming in North America right now is relatively small at the moment. So it does make sense that the revenue is growing relatively fast. But yes, it is one of the positive things that we can see in this piece of news. We can also see that they have been acquiring multiple companies. Of course, that is going to cost them money. That is going to increase their debt position. But we do see that they acquired a German fintech company via fintech, even though it is more difficult for Paysafe to be operating in Germany because of the regulations I've just been mentioning. But this is just a fintech company, so maybe it's not that impacted. And we can also see they announced the acquisition of SafetyPay, and they closed the acquisition of Pago Efectivo, which is a open bank solution in Latin America. So it does look like Paysafe, of course, doesn't only want to be operating in North America. They also want to provide, or they also want to operate in a more significant way in Europe by taking this company in Germany, taking over this company in Germany. And of course, they also want to have a larger presence within Latin America. So they do want to still be expanding their business, and that could be seen as some positive news for sure. And of course, also the valuation of Paysafe currently is relatively attractive in my opinion. We can see, for example, that the current market cap of Paysafe is about $3.3 billion, and the annual revenue is about $1.5 billion expected for 2021. So that gives you a price to sales ratio of 2.2, which of course is definitely on the low end. But yes, in this case, it does make sense with all the bad news that Paysafe has been going through. Now you might wonder, okay, that is all good, but what are the analysts thinking at this very moment? Well, we can see that a RBC Capital analyst lowered his price target from $15 all the way down to $9. We can see another analyst that had a price target of $14 now cut it by 50% to $7. Evercore had a price target of now $4, and another Credit Suisse had a price target of $9, now updated it to $4. So we can see that in general, the analysts have been way more bearish, of course, about this stock at this very moment. Most of them cutting their price targets by literally 50%, which is definitely an insane decrease in the price targets. So keep in mind that that analysts right now are definitely a little bit or quite a bit more bearish about Paysafe at this very moment. But most of them still have a price target that is still above the current price per share of Paysafe. So what have I done with this insane move of Paysafe to the downside? Well, first of all, I did start a short-term swing trade. Of course, we have gone down 40%. That is very bad, but I'm wondering if this is an overreaction because, of course, we do have a lot of bad news, but I'm not sure if this warrants a correction of 40%. It seems to me a little bit of an overreaction, but that is my personal opinion, of course, definitely not financial advice. If you are going into a trade or if you're going to have a long-term position into Paysafe, keep in mind it is very, very risky, and my trade is a very short-term trade, so I could be out of it within hours or days or whatever it is. So let's do a little bit of technical analysis, not a lot, just let's look at the 15-minute time frame, which definitely is a very low time frame. Keep that in mind as well. I started a swing trade because of this candlestick over here on the 11th of November. Where we closed above the 8 daily exponential moving average, which is this yellow line over here, which usually is a good sign. And of course, right now we have seen that we have gone back up to the upside. I started my swing trade around $4.34, if I'm not mistaken. So right now we are sitting at $4.50, but pre-market we seem to go down a little bit, $4.42. So that 8 daily exponential moving average, this line over here, has been one of the reasons for me to start a swing trade. Another reason was the bullish divergence on the RSI. The RSI being, of course, very low at this very moment, which usually is already a good sign by itself. But also the bullish divergence, which we had over here, is usually good. Bullish divergence meaning that the price action is making lower lows, whereas the indicator, in this case the RSI, is making higher lows. That is a divergence, a difference between price action and the indicator. In this case it's bullish divergence because the indicator is showing positive momentum to the upside, of course. Now I can imagine that you're asking yourself, okay, what is the price target that you're having right now? Honestly, I find that very difficult right now because we don't really have a lot of, well, we don't have any previous price action between these levels of more or less $6.87 and this level of about $4.93. So it's very difficult to come up with a price target at this moment. But if we do look at the previous earnings calls, we did see that if we zoom in a little bit, we can see that during the earnings call of the 11th of May, we also had a significant drop after the earnings calls of 12%, but afterwards we did climb back up to more or less the level where we closed at the day before the earnings call, not entirely, but it went very, very close to that same level. And also if we scroll to the earnings call of the 16th of August, we also saw that the stock dropped 15.5% in 1 day time, and afterwards the stock crawled up to about a little bit over the half of the drop that it had made. So the stock closed on the 13th of August right over here, then it dropped all the way down here, and then we went back up here, which is about, well, let's say about 60% of this gap between the opening price here and the drop all the way over here. So it could definitely be the case that we're going to experience something similar, that we're going to correct a little bit more to the upside, go a little bit more to the upside, maybe reach a level of about $5.50 or all the way up to $6. Of course, that is very difficult to estimate. Maybe it's going to continue to go down, of course, but I definitely think it's a possibility that we could go back up to about $5.50 more or less, and then have another significant correction more to the downside potentially. And by the way, if you also want to use technical analysis for your investing strategy, definitely check out nesami.com/TA. I've got a program for absolute beginners in the world of technical analysis, and you can use technical analysis to eliminate your emotions from your investing process to make more objective and better investing decisions. So yes, we do see generally bad news for Paysafe at this very moment, but we could be dealing with an overreaction in the markets right now, which could be an opportunity right now. But keep in mind, this is very, very risky. Always make your own decisions when it comes to trading. Always make your own decisions when it comes to making certain investment decisions. Now, if you're a little bit fed up with stocks and you want to dive into the world of crypto, definitely check out this video over here with my top 5 crypto for this month, November. But if you have already watched that one, make sure to watch this video instead about TPGY, which is a SPAC hopefully merging with EVBox. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!